This report provides a comprehensive due diligence analysis of Linde plc, LIN, the largest industrial gas company globally, using data verified from reliable financial sources. Linde is a high-quality, stable industrial conglomerate, highly valued for its wide competitive moat, recurring revenue model, and strong free cash flow generation. The primary concern is its premium valuation relative to historical and peer multiples. 1. Company overview. Linde plc is a leading global industrial gases and engineering company. Business model. Revenue is primarily generated through the production and distribution of industrial gases, atmospheric gases like oxygen, nitrogen, argon, and process gases like hydrogen, helium, specialty gases. The model is characterized by long-term contracts with customers, often involving building on-site gas production facilities. Tonnage, ensuring highly stable and recurring revenue streams. It also operates an engineering division. Industry position. Linde is the world's largest industrial gas supplier by market share and revenue, operating in an oligopoly with competitors like Air Liquide and Air Products. Its scale and global distribution. This report provides a comprehensive due diligence analysis of Linde plc, LIN, the largest industrial gas company globally, using data verified from reliable financial sources. Linde is a high-quality, stable industrial conglomerate, highly valued for its wide competitive moat, recurring revenue model, and strong free cash flow generation. The primary concern is its premium valuation relative to historical and peer multiples. 1. Company overview. Linde plc is a leading global industrial gases and engineering company. Business model. Revenue is primarily generated through the production and distribution of industrial gases, atmospheric gases like oxygen, nitrogen, argon, and process gases like hydrogen, helium, specialty gases. The model is characterized by long-term contracts with customers, often involving building on-site gas production facilities. Tonnage, ensuring highly stable and recurring revenue streams. It also operates an engineering division. Industry position. Linde is the world's largest industrial gas supplier by market share and revenue, operating in an oligopoly with competitors like Air Liquide and Air Products. Its scale and global distribution network, pipelines, tankers, cylinders, provide a significant competitive advantage. Wide moat. Competitors: Air Liquide SA, AI, Air Products and Chemicals Inc., APD, Messer Group. Management team. Led by CEO Sanjeev Lamba, management is generally well regarded for operational excellence, cost management, and consistently delivering high operating margins. 2. Financial health. Based on most recent available data, Linde exhibits a strong financial profile, characterized by high profitability and strong cash flow, typical of a high-quality defensive industrial stock. Metric value comment revenue, TTM, 33.2 billion stable revenue base from long-term contracts. Net income, TTM, 6.7 billion strong earnings and high profitability. Profit margin, TTM, 20.26% excellent for an industrial company indicating pricing power. Debt to equity, DE, 64.8%, 0.65x, a moderate to high ratio, but debt is manageable with high interest coverage, 64.6x EBIT interest. Cash and short-term INVR, $4.8 billion strong liquidity position. Return on equity, ROE, 17.5%. High return indicates efficient use of shareholder capital. Export to sheets. 3. Valuation metrics based on recent data. Linde historically trades at a premium due to its stability and quality. The current valuation multiples suggest the stock is fully valued compared to the broader market, reflecting its safe haven status. Metric value comment PE ratio, TTM, 33.7 high, suggesting investors are paying a premium for quality and growth. PS ratio, TTM, 6.7 high, indicating a premium multiple on sales. EV/EBITDA, TTM, 17.8, high relative to industrial sector peers, reflecting its wide moat. PEG ratio, NA, often high due to moderate growth rate. The high PE is partially justified by consistent defensive earnings growth. 4. Growth potential. Linde's future growth is tied to secular themes and operational efficiency. Future earnings judge revenue growth, Forecast to grow earnings per share, EPS, by 9.4% and revenue by 5.2% annually. Hydrogen economy. Linde is a key player in the nascent hydrogen value chain, from production to storage and distribution. This provides a significant long-term growth opportunity, particularly in green hydrogen projects. Electronics and healthcare. Continued demand for high-purity gases in the semiconductor industry, e.g., supplying TSMC facilities, and reliable medical gas supply in the healthcare segment offer stable, high-margin expansion. R&D innovation moat. Significant investment in efficiency and new gas applications, which strengthens its cost advantages and proprietary technology. 5. Risk factors. Economic cyclicality. Although defensive due to long-term contracts, demand from key cyclical industries like chemicals, metals, and manufacturing is sensitive to global economic downturns. Macroeconomic, geopolitical. Substantial international operations expose it to currency risks, political instability, and trade conflicts, tariffs, duties. Capital intensity. The business is highly capital intensive, requiring large upfront investments in air separation units, ASUs, and pipelines, which increases fixed costs. Regulatory, environmental. Heavy reliance on energy and chemicals manufacturing exposes the company to evolving environmental regulations and carbon pricing mechanisms. 6. Dividends and returns. Linde is considered a strong dividend growth stock. Dividend yield, 1.22%. Annualized dividend, $6 per share. Payout ratio, 40.71%. Moderate, indicating sustainability and room for reinvestment. Dividend track. Record, 32 consecutive years of dividend increases, highlighting its stability and commitment to shareholders. Buybacks. The company has a significant and aggressive share buyback program, $15 billion announced recently, which is a major driver of shareholder return and EPS growth. 7. Market sentiment. The market views Linde. 8. Macroeconomic impact interest rates. As a capital-intensive company with debt, high interest rates can slightly increase its borrowing costs, though its high interest coverage ratio mitigates this risk. Inflation. High pricing power and contract-based revenue allow Linde to effectively pass through cost inflation, especially for energy, to customers, making it relatively defensive against sustained inflation. Global trends. Highly exposed to global industrial production and GDP growth. 9. Technical analysis based on recent price action. Short-term trend. The stock is currently trading within a rectangle formation between support and resistance, suggesting a period of consolidation. Key support level, $464-$470 key resistance level, $485 moving averages. The stock generally trades above the key 200-day simple moving average, SMA, indicating a strong long-term bullish trend. 10. Corporate governance. Board structure. The board of directors has 5 standing committees, audit, human capital, nomination and governance, etc., which are primarily composed of independent directors, suggesting good oversight. Executive compensation, governed by the Human Capital Committee, focused on linking compensation to performance and long-range planning. Shareholder rights, generally aligns with best practices for a company of its size, though the recent delisting from the Frankfurt Stock Exchange concentrates trading on the NYSE Nasdaq. 11. Supply chain exposure. Key inputs, heavily dependent on the availability and price of energy, electricity, natural gas, as a raw material for air separation. Logistics, relies on specialized logistics for gas transport, pipelines, and tankers. Geopolitical choke points or transportation disruptions could impact delivery to customers under long-term contracts. 14. Insider and institutional data. Institutional ownership, 84%, very high, driven by the Vanguard Group, BlackRock, etc. Insider ownership, 1%, very low, typical for a megacap. Retail interest, the general public retail investors own about 15%. 15. M&A activity history. The current entity is the result of the 2018 merger of Praxair and Linde AG, creating the global industrial gas leader. The company is historically active in strategic, smaller acquisitions to expand reach, e.g., Linde Holdings in home care. Status. Due to its massive size and dominant position, it is highly unlikely to be a takeover target. It will likely remain the acquirer for strategic bolt-on deals. 16. Innovation and moat. Competitive moat, guru focus, wide moat rating, moat sources, high switching costs. Customers build dedicated on-site plants, tonnage, tied to Linde's supply contracts. Economies of scale distribution, unmatched global network of pipelines, plants, and logistics infrastructure. Intellectual property, valuable patents and proprietary technology in gas production and application, e.g., hydrogen. 17. Cyclicality, economic cycle, sensitivity, moderate. While a foundational industrial company, its long-term contracts, tonnage, provide a defensive, counter-cyclical buffer, making it less volatile than pure-play industrial manufacturers. Seasonal patterns. Quarterly revenue shows slight fluctuations, but no strong, pronounced seasonality, indicating stable demand across the year. 18. Tax and accounting practices. Effective tax rate, ETR. The company utilizes its global structure for tax efficiency, with its ETR fluctuating but generally managed effectively within regulatory guidelines. Accounting policies. Financial statements are prepared in conformity with U.S. GAAP. Key areas of scrutiny typically involve the valuation of the significant property, plant, and equipment, PP&E, and goodwill resulting from the mega merger. 19. Employee and labor risks. Workforce employs 65,000 people globally. Labor risks. The company has a detailed human rights and safety policy, recognizing freedom of association and prohibiting child forced labor. The main risk is occupational health and safety in the highly regulated industrial environment. Dependence on specialized engineers and technicians is a factor for key project execution. 20. International exposure. Global footprint. Has substantial international operations across the Americas, Europe, and Asia. Currency risks. Significant revenue and earnings are translated from foreign currencies back to the reporting currency, USD, creating exposure to currency exchange rate fluctuations. Geopolitical risks. Exposure to trade sanctions, tariffs, and political instability in various operating countries. The high degree of geographical diversification helps manage this risk.